Hey, good morning, everyone. Welcome to the Macro Snapshot and the new week. We are Monday, November the 10th, 2025. Okay, so just looking at a few charts here, we're waking up to quite a lot of optimism or a little bit, sort of a subtle sort of risk on tone. And that's just because it seems yesterday that there was a sort of a procedural vote in the Senate. And eight Democratic senators basically decided to sort of cross the floor and side with the Republicans. So there was a 60 to 40 sort of vote in favor of proceeding with some kind of sort of spending bill. And a lot of people are saying this could lead to the reopening of the US government. Keep in mind that was a procedural bill, so it's a positive development, but there's still that still needs to pass a vote in the Senate and in the House of Representatives. So we're not there yet in terms of reopening. But it seems that the upcoming sort of Thanksgiving holiday and the prospect of complete chaos and a breakdown in U.S. Transport and aviation has focused everyone's mind. Not to mention the food stamps and whatnot. But anyway, the point is that a bit of sort of a risk-on sort of feeling, and you can see here that if we look at the VIX, which hopefully is coming up. Yeah, so you can see that the VIX is down a little bit, so volatility down, and that's been reflected in the equity. So you can see here the ES, so the S&P 500 up a little bit, and this is now looking like pretty solid rejection here from that sort of Friday level, and almost could be sort of some kind of bull flag. And if we just go back a little bit, this is on the daily charts, you can see here that we have had a few sort of long wicks here, sort of pushing down, but ultimately here, we pushed through the 50-day moving average a couple of times, but pretty quickly rejected. And you have to say that if the government does shut down, the fact that that will no longer lead to a prolonged economic kind of stagnation in terms of people not having paychecks and spending, there could be a short-term push up towards these recent levels of 69.50 or so to retest the highs. Because as I say, there's not much technical damage being done. I mean, could you argue that this trend is starting to show a few cracks like here and here and here? Yes, you could. But the reality is that this is still in a strong uptrend and the moving averages are still pointing upwards. Although the shorter term ones are showing some signs of plateauing. So, we're not out of the woods yet. And what is interesting is that if we look at that sort of short term optimism about a potential reopening, we also have to balance that with the fact that we are potentially then going to start getting some data from the economy, because obviously the shutdown prevented the release of a lot of data, a lot of data such as non-farm payrolls, some CPI numbers, your retail sales, all of these things. We could start gradually to get those over the next few weeks. And there's nothing to say that that won't represent negative news. So, for example, there could be sort of, weakness in the in the employment situation, in retail sales, in the general economy. And that's going to change the narrative very, very quickly. So what we need to do is to balance that short-term optimism with, things like, potentially weaker data, sort of negative sentiment. I mean, that could be tied with the government shutdown. But keep in mind that last Friday we got sort of fairly sort of unpleasant consumer confidence readings, and there's also still continuing ongoing concern about the U.S. deficit. There's still plenty of sort of deficit spending happening, and we got the QRA last week, which did say that at some point, maybe in 2026 to 2027. So for sure, it's quite far away. But the US Treasury is thinking, it's looking at potentially expanding the number of coupon issuance, the size of the coupon issuance, which would be sort of a negative. So the point is there are still some negatives around. And if we actually just look at a few things, we can look at, let's say, just want to just go through a few different charts here. Well, first of all, let's just see what's happening with the Fed, because now, of course, that if the Fed will start to get data, keep in mind that now we've got about 65% chance of a cut. So there's one cut coming up in December, which you can see here on the FedWatch tool. But if we go back, let's say a week, you can see that has come down, and then compare that to 1 month ago, where there was a 91% chance of a cut. So the market is definitely repriced in a sort of a relatively hawkish way from, let's say, a month ago or so. But that could change very quickly, as I say, if the data, which will start to sort of circulate through the system, shows any kind of negativity. And what's also interesting for me is Trump over the weekend was out talking about some kind of $2,000 bonus to low-income families, some kind of tariff bounty, redistributing the income from the tariff. So he's really desperately trying to push the idea of, sort of tariffs as this wonderful thing. I'm not saying it is or isn't, But there is some concern here that that the government is lacking fiscal discipline, and that could sort of reignite sort of inflation. And that's interesting here if you look at gold. So this is the daily chart for the front month on the futures. You can see here the gold is still in an uptrend. We did have a bit of a blip here on the 20-day EMA, and obviously there was a nice sort of retracement. But if you actually look at that from a technical perspective, let's look at this impulse here going from the 19th of September. You can see that more or less it was sort of held at the 61.8 fib retracement here. And then suddenly, there was sort of some kind of upwards channel, and we're pushing higher, a big sort of breakout candle this morning. And that's unusual because we do have this, as I say, overnight sort of slightly risk-on tone. So it's interesting to see that gold is pushing higher here. If we and I think this is concerns really about sort of the fiscal spending. These $2,000 sort of helicopter money just being pushed out to everyone potentially. But that Trump's talking about it. If we also look at silver here. Another push higher, breaking much, much higher. Again, bouncing off the 50-day EMA and some of these key Fibonacci 61% levels here. No surprise as well that copper is also having a bit of a push higher, just on the back of this risk on. So talking about the risk on as well, overnight from China, we got a little bit of what the market thought was positive news. There was sort of quite a few announcements coming from the Chinese Ministry of Commerce, essentially dialing back, scaling back some of these export controls on the rare earths, and also a couple of other technical measures. So a bit of positivity shown towards the US. So in terms of the US-China sort of trade spat, that's positive. We also got overnight some CPI and PPI news. And I just want to bring up here the Australian dollar versus the Japanese yen. And just that PPI, and you can see here the Aussie really breaking pretty much higher against all currencies, but especially against the Japanese yen here, pushing to the top of the range. And as I was saying, that in China we got higher than expected as CPI, but also a less negative than expected. So I guess you could say a higher than expected PPI. So that was sort of alleviated some concerns about sort of a slowdown in consumption in China, the fact that maybe sort of economic activity is picking up, and the deflationary sort of signs we've seen over the last few weeks are maybe lessening. But keep in mind that in the PPI, it's still negative. It came in at minus 2.1, so deflationary on the PPI. So don't want to get too excited there. But overall, for the Antipodean currencies like the Aussie and the New Zealand, this was a positive. If we look at the Aussie against the US, we can also see that's up quite a lot. We can see that USD is down against the Canadian dollar. So quite a lot of positivity. Although I would say that, just getting back to the Australian dollar up against the New Zealand dollar is definitely outperforming that. And if you actually, interesting chart here that you can see here that the Australian dollar versus New Zealand, there was some kind of, I think it goes back all the way back here, back to sort of some kind of triple top, but definitely it's broken above that on the dailies here. And you can see here that the Aussie broke out of this sort of bull pennant, bull flag kind of situation here, kind of had a bit of a hesitation at that overhead level at about 115, and now is broken decisively above. So if we put that, let's say, on a weekly chart, that looks as though there could be more upside there. So you can see on the weekly chart just how important this level was, this kind of triple top here. And it's now broken out into open space. So there could be a bit more upside in the Aussie versus the New Zealand dollar. So we have equities up. We have some of the risk-on currencies up. In terms of the US dollar, it's going okay. I mean, against the safe havens, it's outperforming the Swiss franc and the Japanese yen. But overall, it's pretty flat here. Actually, just put it on the daily chart here. And it's down a little bit against, as I say, some more of these risk-on kind of currencies. So what we have to look out for today, just want to have a look at oil here. And you can see that oil not really getting a huge boost. I mean, at the open last night, oil was up a little bit, but not really, sort of benefiting a huge amount from, let's say, a little bit more optimism about US and China and the trade, and also the fact that the US government is opening. So still some lingering doubts here about the global economy with oil. I do believe in the next few days we get the IEA, their sort of annual report. I think it's the annual report. I have to double check about oil consumption and their forecast. So that's going to be an interesting one to see. But as you can see here, oil's still trading in a slightly soggy manner. I mean, could you argue that this is a bit of a sideways consolidation, some kind of, sort of soft bullish flag? I mean, maybe, but really, I think what we're going to need is, some much more better news on global trade and the tariff situation, and maybe something about the sort of the surplus. Of course, there's still sort of concerns that there's going to be a surplus going into 2026 on oil, so still trading somewhat sort of heavy, so to speak. So that's about it, guys. As I say, not a huge amount of data coming up. There's a couple of Fed speakers we had daily this morning with a relatively mixed message. I mean, maybe slightly dovish. She was essentially saying that inflation is still a concern, but the balance of risks have turned, in her view, more towards the employment situation. So I guess you could argue fractionally sort of dovish from daily. We have Muzalem, I think, today coming as well this afternoon. So let's hear what he has to say. But overall, the market. We'll probably now just wait, to the upcoming data, which will hopefully be released. Now it's going to give us a better read on the US economy, not any other data coming out today. So I'll leave it there, guys. Have a great trading day, and we'll continue this tomorrow. Thanks very much.